Thank you very much, sir. The program is ending in another 15, 16 minutes. We have 2 more questions. And okay, so Mr. Ogbodo Okechukwu, looks like you have a question. You want to go ahead and ask Dr. Ken? Unmute yourself, please. Okechukwu.
Hello, are you hearing me?
Yes, loud and clear.
Yeah, please, thank you very much, and being glad to be here. And also, thank you very much, our our moderators there, Lady K, Dr. Ken, and Chief Olufemi Boyede. I'm glad also to be here. Please, sir, I want you to, yes, as part of ways to make a Nigerian trader know or transfer the or know more about the market is entering, you say there's transfer of knowledge, and I equally add that enablers should be followed, because when you talk of one of the enablers should be funds. Now in Nigeria, the problem of Nigerian bank is that they do not want to develop SMEs in international trade or even anything. They don't want to develop it, because when you talk of mostly when you talk of banks, you go there for funds. First of all, are you going for loan? And if they are going to give you any loan, they will talk of cash flow. How do you build cash flows that are profitable in that will form the basis to give you the loan without being in the market or without being trading before? So these are the problems. Now, how do you, as a professional in the field, Dr. Ken, how can we make Nigerian banks understand or have a way in which they will have funds or for SMEs that are coming into trade, like most of us? Thank you very much.
Thank you so much. I think this is a very, very fantastic question, and I'm happy. Boy, I'm so glad the way this this particular program is undertaken, in the sense that it becomes interactive. And that's why I've also limited myself within the ambit or the circle of practicality, so that we do practical, work here, practical discussion, not putting the trade laws and all of that, or bringing in, a lot of technicalities, but then practical, what can go. Look at this question is very important. For some time now, I have dealt with many banks, especially here in Nigeria. And we have had discussions about development financing. Development financing is one critical area that banks frustrate this country. One very important area, critical area. But these banks do not seem to understand also that once that their role has a win-win benefit. Now, let me give you this. If you look at the branches of banks in Nigeria today, over 80% of our banks are located in the markets. I don't know whether you have noticed this. Where you see traders, this is a marketplace. Look around you, you will see banks. Most of the banks will be there struggling to put a space, to put a structure and exist. Why? Because of the money that is transferring hands on daily basis, on hourly basis. Transactions are going on. Unfortunately, these banks do not understand that if they transfer money in terms of development, if they also assist, create facilities for these traders, create facilities for manufacturers, create facilities for farmers, the funds will return to them as benefits. They are only looking at risks every day. And you will stand on the risk, and many of the banks are going down. And I'm not going to use the word liquidated. They are going down. You know why? Because they didn't open the space for lending. This is the same problem with insurance. Before I go back to the bank, insurance companies today. A few years back, I started discussing with the Nigerian Insurance Corporation, NIACOM, the commission. And we assembled, about 7 insurance companies that were approved over the incessant market fires that have been happening in Nigeria. And I called them, I assembled them, I said, look, what do we do? You have to do something about insuring the markets, but you need to, before we do that, before the traders will have confidence in you, you have to announce yourself to them. If you don't say, I am, nobody says, thou art. You don't expect anybody to say, thou art. That's the same principle for banks. They need to announce themselves. They think that, because people are bringing money to them, after the end of every sale, you see traders bundle their money and then go and save in the banks. That is not banking. That is not banking. Banking, the fundamental key purpose of banking is a redistribution, facilitation of redistribution in the economy for sustainable development. And I repeat it. Facilitation of redistribution of wealth for the, for sustainable development. Many of our banks do not understand this. And if you look at what is happening today, you will see that there are new financial instruments rising up. In fact, we are discussing with many of these facilities today. They are ready. At the press of your phone, star this hash. In under 24 hours, you get a loan. Huh? They are not looking for, your, they are not looking for anything from you. And they will make sure that that fund comes in. And they know how to do their due diligence. And they also, in fact, majority of these people, I have worked with them, and they are telling me that with what they have, there is success stories. And I'm very happy to also say this, that some banks are now looking in that direction because they have lost a lot. They're not breaking evens. Most of them are looking at how they look at their marketers, and then they give them, how much they're going to bring in, billions that they will have to rake in. And the billions are not coming in. And they forget that these small rake in, 10 naira, 20 naira, 100,000, 500,000 from the traders make the bulk of the money. So, my good brother, I think that the banks in Nigeria have not understood that. I see the Central Bank of Nigeria having a role here, even though the Central Bank has also been, calling on them at all times. But I think that for a development, focused economy, the Central Bank would need to be a bit more, would I say, firm in ensuring that these banks do what they ought to do. Ugly enough is that the central banks also sometimes, you see, central bank releasing some funds to them for onward transmission to the, either the traders or marketers, or the manufacturers or the farmers. And they will also hike the percentage, which is a disincentive to the development and economy. And compare that with China. I'm sorry, I'm mentioning some, names here. Go to some other developed countries. You will see funding. Go to India. Go to Malaysia. You will see banks giving funds at 3%, at 5%. And you ask yourself, what kind of system are we operating? And those banks are even breaking evens the more. In terms of, turnover, they make more money. So I think our banks need to learn.
Thank you, sir.
Thank you.